Good afternoon. Welcome to Auckland, New Zealand, live from the Black Bull Markets trading floor. Keen to do a quick video regarding the recent moves we've seen in cable, following a very volatile developing story with Brexit and the agreements between both the UK, the European Union, and possibly Germany, considered as more of a mediator or a key player here. Now, of course, from the weekend, turn your attention to the chart, we saw this gap in cable, and that was due to Theresa May ruling out the possibility of a second Brexit vote, which a lot of people have been calling for recently. And off the back of that, you did see a gap. Now, from a technical perspective, traders know, it's a well-known fact that gaps do get covered, especially in the FX market. Even though volatility has been volume has been rather low in the past few weeks, we have now seen this gap covered at 129.551, just above that level, following this pretty extensive spike here earlier on in the day. Now, the reason for this video is to really give you an update on what's going on with Brexit and what can we really expect on the future path of the pound. Now, Reuters reported this morning that the German government officials have denied the Bloomberg report that was released a few days ago, which is probably the reason the pound's been kept so pressured to the downside. And that report was talking about the UK's position on Brexit. Now, Reuters reports denied that initial report, and that was the main reason fundamentally pushing the cable higher, and you saw within a half an hour span spiked almost 1,500 points. So it's pretty interesting, especially given the sensitivity of Brexit news from these news agency reports, and how reliable they are. We're not sure, especially if we have two contradictions from both Reuters and Bloomberg. However, nothing changes about Brexit. The UK is still set to leave the European Union. Critical dates are looming for the Brexit process. Also, in the previous report released by Bloomberg, they stated that British and German governments have abandoned key Brexit demands, potentially looking to ease the path for the UK to leave the European Union and form a deal. Just bring you up this chart here that's got the key Brexit dates coming up in the next, well, up until the UK leaves. So September the 20th, the EU summit. It's pretty key, and as far as this year goes, we have the conferences within the Conservative Party the end of this month, and leading up to October, EU summit in Brussels, and officially next year, March 29th is the key date, and that is when the UK leaves the EU, or at least starts a transition out of the EU. And that transition period has a timeline for just less than 2 years, where on January 2021, the transition period officially ends, and the UK is due to start trading with the EU on a new trade deal from that point. What we did see, however, after this strong spike up around 3:30 p.m. GMT +2, about an hour ahead of London time there, was the German official coming out and saying that Berlin's position on Brexit has not changed, and they're putting their full trust in the EU negotiator, Michael Benny, who's currently negotiating the Brexit deal. And that news caused the pound to fall below 129, and kind of falling through that near-term support level that we saw there, but then now we're seeing it kind of tick higher. So really what we're looking for is any other news coming out from the UK or Germany or Europe. Of course, this shift now means widespread opposition to Theresa May's proposal for a future relationship known as the Chequers Plan isn't necessarily going to be an obstacle now in getting a deal done. Negotiators in the UK and EU are slowly starting to plan a document, I believe, of about 100 pages, and that could be almost done, or at least 50% done, and due to that, we're getting some bulls come back in cable, and potentially we could now see cable return if the news continues to be positive, which looks like the markets and the bulls are driven by positive news, back up above 130, which is of course a key psychological level for traders of this cross. We failed to cross it earlier today, but potentially we could see a crosshair between your 200-day and your 50-day moving average, so it's called as the death cross rather than the 4-hour chart. Looking possible, and with that could see a sign of a turn to the upside. However, overall on the longer time frames, we're still pretty bearish, with the gains of course being still capped by this 50-day moving average here on the daily chart, and 130 looking like a credible resistance level to be broken through. Let's have a look on the weekly. Again, still pretty bearish. However, once more, if you do climb above 130, 132.13 is the next target above there. So keep your eyes on those key levels on the cable cross. And for any other questions or any support required, please do let us know. For more also great videos like this, hit that subscribe button below and stay tuned to more updates. Stay safe with your trading. All the best.